Well, good day, everyone. Thanks for taking some time out to join us. We'll spend about 30, 45 minutes today going over a new product, but I do want to just say up front, thank you, as always, for taking some time out and listening to what we have to present to you and the partners that we put in front of you. We always recognize that your time is valuable, and we try and make sure that we only put topics on these webinars that we think you can specifically benefit from. I will level set up front and just kind of let you guys know a couple of things housekeeping wise. All of your lines are muted, but we do like questions. It doesn't mean that we don't want to hear you. We just don't want to hear background noise, especially live and with the recording. So there is a questions function on the right-hand side where you can enter those questions. I will be monitoring that throughout the entire webinar. You do not have to hold those for the end. Anytime you type a question in there, I'll see it, and we will answer those as we go along. So that is first and foremost. Also, we are recording this webinar, and I will be sending it out either later today or sometime tomorrow. I do have one ask of all of you, is when you get that email from me, if you wouldn't mind just replying back and letting me know a couple of things. You know, where are you at with your business currently? I don't know if you're anything like me. December kind of snuck up and surprised me, and it's been an interesting, crazy year, which everybody already knows that. But I'm curious to see where everybody's at with their business and what they're thinking about in 2021, business-wise, and what are some of the main things specifically that we can help you out with. So if you don't mind taking a second to think about that and reply to the email when I send it out to you, I would greatly appreciate that, and that will help us support you better going forward. So our product is, we got a new product to talk about today, which is always a popular topic, and people generally respond well to that. This is going to be a unique, specific product, which I won't talk too much about. It's a partnership between Protective, who's one of our main core carriers. Everybody's aware of that. We've partnered well with Protective for many years now, and Diane Eskin, who some might be familiar with and others might not, but they have been around for longer than the year 2000, but I think since 2000 they've really focused on partnering with insurance carriers and creating unique product offerings, specifically in the executive benefits market. And I think as they're presenting the meat of the webinar today, you'll see from Rick and Jake Eskin their expertise in this marketplace. So I'll turn it over to them in a second. Last thing that I will mention is success shares. If you've done business with financial brokers in the past, you know that we typically have some really unique and really unique incentive trips, and we go within the United States, outside of the United States, and that might not be as appealing to some as it used to be in the past currently. So I do want to remind everybody, although it's not taken advantage of as some of the incentive trips that we do, with our Success Share program, you do have the option to redeem those Success Shares for cash. 15,000 Success Shares is $500 in cash. And with a Tier 1 carrier like Protective, you get one Success Share for every dollar in annualized life premium. So as you'll find out as we talk about this product, one of these cases would probably get you very close, if not over the mark, for being able to redeem some of those Success Shares for cash in your pocket if the incentive trips are not as appealing as they have been in the past. So with that, I'm going to change the presenter over to hopefully the real Jake Eskin and let Jake and Rick from Diane Eskin take over and share a little bit more about the main topic for today. And if you can hear me, I believe that you are muted.
Hey, Tim, this is Jake. I'm just. Can you see my screen yet? I haven't seen anything pop up.
Oh, I cannot yet. I think I turned it over to the wrong Jake. Try it now.
There we go.
All right, perfect.
How's that?
We can see you.
All right, great. All right, Tim, thanks so much. This is Rick Eskin. I need Jake around here to make sure I'm technologically sufficient. So for everybody who's on the line, thanks for making the time today. I'm going to run through this relatively quickly so we can get a lot in, because this is a very exciting plan. This plan, called Protective Executive UL, was launched on October 19th, about a month and a half ago. We've gotten about 60 censuses in. We've made a bunch of sales. It's a hot program in the United States of America. And we are the administrators. We're not agents. We're not BGAs. We're just push paper, push electronic, push online enrollment. We're here to help at any time you need anything from us in reference to explanation, marketing materials. We're here to help you. On that, with that in mind, we're going to move forward here. So this is in the group term Carve Out arena. This plan with Protective, brand new plan. It's called Executive UL. This is a corporate sale, as you can see dead center in your screen. It's a corporate sale. This is not voluntary. The corporation is paying the premium. The entity, the employer, they are paying the premium. They're purchasing this coverage, and it's a multi-life sale in the executive benefits area, as Tim mentioned. So again, the company, the employer is paying the premium. They are choosing a certain sector of their executive population or their highly compensated employee population to provide this coverage. Again, a perk, executive benefit. So this little circular thing that you're looking at is important. If you can look at around 10 o'clock, individual current assumption universal life policy. So each person insured is going to be insured via a UL contract. Now this is going to be a little different than your typical UL. The company, the employer, is going to pay the premium, and the premiums are just the COIs. That's the impetus. That's the direction of this plan, just to cover the COIs, just the insurance. We're not really looking for cash value buildup. The insurance premiums are very, very low. That's at 10 o'clock. At 5 o'clock, you can see guarantee issue type underwriting. This is really the crux of the matter here. This is guarantee issue underwriting. There are no medical questions. There's no medical exam. There's no APSs. There's only a couple medical questions. It's guarantee issue. That's really the terminology used in the market. You can see at 3 o'clock, 2 o'clock, corporate paid program. There is no voluntary aspect. Corporation, employer pays the premium. So couple premium possibilities here, how to pay. So let's go look at the top one, minimum premiums. This is what 95% of the cases, or 90% of the cases, that's the direction and reference to the premium. Again, the employer is paying the premium on a sector or division of their highly compensated people. That's the minimum premiums. These are the COIs only, the cost of insurance only. So because that's the cost of insurance only, those premiums go up each year, because that's all it's driving is death benefit, almost like an ART term insurance contract. Again, that's the impetus. Those premiums are guaranteed, the premium schedule increasing, are guaranteed for 5 years. That's an important factor because no other plan in the marketplace will guarantee minimum premiums for 5 years. We have the flexibility, as you can see on the bottom, to level off that premium and guaranteeing it as well. Why would we do this? Just to give the employer some flexibility for them to pay premium the way they want. Anytime you give the employer some options, I think you get closer to a sale. An employer may want a level premium for some reason, 3 years or 5 years or longer. We just had a very large law firm who, a very sizable case, who wanted they could do the minimum premium, but they wanted, for budgeting purposes, a 5-year level premium. So we can do that. Here's an important slide. about the specs of the contract. So again, we're in the multi-life arena. In this program, Executive UL, it's called Executive UL, we need 25 lives insured, not 23, not 18, 25. We can write insurance on people 18 to age 80. That's a big number. No other carrier in this space will go anywhere near that 80 number. At age 70 to 71 to 80, we require more medical underwriting. Not exams, not blood work, just some Part 2 questions. Again, we're looking for white-collar workers earning $100,000 or more. So a company will say, okay, everybody in my company, I'm going to insure who's making $100,000 or more. Or it may be all vice presidents and up. Or it may be all partners in a law firm. It may be all equity partners in the law firm. It may be everybody making $200,000 up. It may be all the doctors in the hospital. So there's lots of ways for the employer to make that cut of who they want to cover. The basic cover charge is white collar earning $100,000 or more. Premiums are set under a gender distinct basis, so females are lower than males. There is no smoking question, so everybody's really a non-smoker. As I said before, premiums are guaranteed for 5 years. And in this program, remember, this is an aggregate premium program. What do I mean by that? Who's making the decision, since the corporation is paying for it? Somebody's making a decision. They're looking at aggregate premium, a CFO, a CEO, an HR director. They're not looking at one person's premium. They're looking at 62 people or 162 people or 662 people, depending on who's going to be covered. So it's this dynamic of, 62 people, new people come on, older people leave, younger people come on. So there's turnover involved. So it's the aggregate premium look that drives a lot of these sales. Minimum death benefit you can see is $100,000. The last thing on this page is very, very significant. We will go up to $5 million of coverage on any one person or a bunch of people. That is a big number without an exam, without that type of underwriting, without blood work, without APSs. Very, very important. I'm going to get into that a little bit more. So, as you can see on the left-hand side, this is the formula that drives how much insurance we can get on any specific case. That formula is based on the number of lives insured. So you can see 25 to 49 lives. You multiply that by 40,000, and that gives you the maximum amount on that case. Let's make it easy. Let's say you had 25 people to be insured. You multiply that by 40,000. That's $1 million. So you can write all 25 people $1 million each, or you can write 2 times salary to $1 million. Or you can say for the top 15 people, I want $1 million each. And for the 10 people in that class, we want 500,000. So there's lots of ways of creating classes, as long as the class has some spread in it and it's not selecting against protective. That second formula, you can see at 50 lives or more, your multiplier is 50,000. So again, easy math for me. You multiply 50 times 50,000 is 2.5 million. All 50 people can be at 2.5 million, or 2 times salary, or 3 times salary of 2.5 million. That's very, very significant. That's a lot of insurance on a lot of people without an exam or blood work or the aggravation of open market underwriting. On the right-hand side are the eligibility questions. These are the only 2 questions on the application that are medically related. Actually, the first one you can see is an activity of work question. The second question is an actual medical question. In the past 90 days, has the proposed insured been absent for 5 or more days due to illness or medical treatment? That is the only question, period. So let's go back to 2 things. One is this multiplier on the left-hand side, and the slide before said we can get it to 5 million. So it is feasible if you have 100 lives or more. 100 times 50,000 is 5 million. So you could write 100 bodies, 5 million each, with that one medical question on the right-hand side. That's amazing. As you can see on the bottom left-hand side, we can, in certain cases, write non-U.S. citizens working outside the United States. This is also a great thing that we can do because a lot of these cases, consulting firms, law firms, tech companies have people outside the United States. On the left-hand side, at 11 o'clock and 9 o'clock and 7 o'clock, carve out additional coverage replacement. Let's level set this for a second. These three things, carve out additional coverage replacement, is when you will have those individual policies will be owned by the employee that's being covered. The employee being insured is going to own those contracts, individual contracts. This is not group insurance. Individual contracts. The owner will be the employee. He or she will name their own personal beneficiary. The company, as I've said several times, the company, the employer, is paying the premium. So let's go through these quickly. Carve out. That's the traditional carve out. That's where the name of the Carve Out program comes from. You're carving out of traditional group insurance and giving these highly compensated people a better model, M-O-D-E-L, a better model of life insurance than group insurance. And there's several reasons why it's better. I won't go over that right now. Additional insurance. They can't get enough insurance on these highly compensated through group insurance or whatever insurance they have. This can just stack on top of what they have, or replace and stack on top of what they have. Remember, we can go up to 5 million on certain cases. And replacement. There are half a dozen other carve-out plans in the marketplace. I won't mention the insurance company's names, but they're all good products. All those other competitors are good products. We're just better. We're coming in at lower premium. We're coming in more guarantee issue. We're coming in a lot of things that are better than all the competition. So we're in the midst of replacing a lot of other competitors right now. And that will continue in the future because our product, this particular product is so good. So again, carve out additional coverage replacement. Employee is the owner, names personal beneficiary, employer is paying for it. At 1 o'clock, corporate owned, because these are individual policies, the company, the employer, can be the owner and beneficiary for key man purposes, as you can see, or buyout. So that's valuable. About 12% of our block, and we've been doing this for 20 years, Diane Eskin, 12% of our block is corporate owned. Not small, not monstrous, but a pretty good number of clients of ours have a corporate owned situation. And at 3 o'clock, cash value situation. As I mentioned before, the impetus, the theme of this program is not cash value buildup. It's getting the sale with minimum premium, almost like term insurance. However, in certain situations, if the employee wants to put in extra money for long-term life insurance needs or long-term retirement fund needs, or the employer wants to fund some people over and above the minimum premium, they can, maybe for deferred compensation arrangements or whatever. We can do that. Again, not the driving force of the program. Here's a little bit of competition. I'm not naming the insurance companies here. However, they're all great insurance companies, and all these products are good. All these products are good, except ours is better. And you can see here's a little idea of why it's better. This is $1 million of insurance, so you can see on the right-hand side, 50-year-old male. This is a first-year annual premium. You can see we are number one in the industry right now. And actually, the gap between us and carrier B and C and the others actually is even greater than what you're looking at, because these on carrier B and C, this is their newest premium on plans that were written after 1/1/20. They have scores of plans, carrier B and C, that were written in years past, that their premiums are 10 to 15% heavier, even 20% heavier than you're looking at. We just compared to carrier C on a very large case, and we're coming in 28% less. So this is just a great program with a great insurer, and again, we're here to help. We have all the information about all these carriers in reference to their premiums, so we can compare if you need us to help you with that. Why is this good for an employer? Well, it's a retention tool. You can see in the first bullet. The comfort of a 5-year rate schedule guarantee, that's important. And value of partnering with Protective. Protective's a hot insurance company. I'm not a Protective employee, but as you guys know, probably better than I, Protective is really hot in a lot of their term insurance platform and also their universal life platform. What is the benefit for the executive? Well, the first one is the most important. The employer is paying 100% of the premium. 100% of the premium. And anytime you get the employer to pay, that's great. Second thing is important. This is portable without change to the death benefit or the pricing. If they leave, it's the same pricing that they'll pay. If they terminate employment, the same pricing as their ex-employer was paying for them. That's important because several of the competitors that I just showed don't do that. The benefit changes and the pricing gets to be quite a bit higher. A little bit about the company, who's buying this stuff. I always like to show a slide. Who is buying this stuff? Well, first, on the left-hand side again, 25 highly compensated white-collar workers earning $100,000 or more. Here are some industries. It's all over the map. The first two are kind of logical, kind of practical. Healthcare, that's, hospitals, the executives and doctors of hospitals. We have a who's who of those entities, and law firms. Pretty easy, covering the partners, the equity partners and associates, pretty typical. But it's really over the lot. And again, back to 25 highly compensated people. There's hundreds, if not thousands, of these firms in every city. Thousands. If you're in a big city, it's tens of thousands. We have an example, retail. We have a furniture company, a big furniture company. We have a bunch of tech companies, including probably the largest cell phone company in the world. Consulting, we have a who's who of consulting firms, including the second largest in the world. We have education, we have 3 universities, engineering firms, financial, we have banks, we have private equity firms, we have 3 insurance companies. We have one of the biggest, if not the biggest, beer company in the world covered. We have a horse racing entity. We have an auction house. We have a luggage company. So it's really as simple as 25 finding companies, and all of you on the phone, there's not a single person who's not on this call who doesn't have a prospect or a client in this that's good for this platform. 25 highly compensated employees earning $100,000 or more. What do we do? Well, we've been in this business for 40 years. Carve Out, in the insurance business for 40. Carve Out 20 years will be in a month and a half. One thing that's very important, that third bullet from the top, SOC 2 accredited. Many of you may not know what that means. That is the highest accreditation you can get for data security. That is a very, very critical thing. We get asked this question all the time from potential Carve Out clients and agents and BGAs. Are you SOC 2 accredited? And we are. It's very, very cumbersome to be SOC 2 accredited, if anybody on the phone knows anything about it. And it's very costly. But we have to be that because our clients and your clients must be comfortable with how we deal with data security. We do all the proposals, all the what we call premium sum reports, which will show what the premium is for your client or for your prospect. We handle all the implementation. It's all online. Implementation and ongoing administration. New people come, older people leave, et cetera, et cetera. We manage the executive UL platform for you, which makes it even that much more profitable for you because you're not touching an application and you're not dealing with everyday administration. Who is selling this stuff? Probably everybody on the phone is in one of these categories. Estate planning, individual life sales. You probably have some people up the ladder at companies who you sold something to. Executive benefits, folks, that's in the multi-life arena. This is a multi-life sale. So anybody who's in executive benefits, it could be non-qualified deferred comp, it could be guarantee issue, individual disability insurance, IDI sales. The third one, employee benefits, group insurance, group health, group life, group LTD. You're already there. Here's a way of creating something for your client that is very valuable, better model of insurance, and also creates a flank for you versus competition. I don't have a lot of experience in the property and casualty insurance agents, but all the BGAs I've talked to said, make sure you put this on your slide, Rick, because it's a growing segment of BGA and agent business. So here's who is selling this stuff. Why is it good for an agent? You can look at the bottom. We have also why it's good for a BGA. That's clear. But why is this valuable? Why? It's a new product. Your clients and prospective prospects probably haven't heard about it. There's nothing like bringing something new and exciting. No open market underwriting. No heartburn with APSs, ratings, and stuff like that. We do all the work. You're not going to touch an app. We do all that work for you. So you can get to the next case. And it creates corporate clients if you don't have a lot of them. There's very high commissions on this plan, and I want to talk about that right now. This is the commissions I'm going to talk about now are to the producer, to you guys. Year one commission level is 40%, 40. Let's stop there for a second. What does that mean? Our average size case is 110,000 of premium, 110. So if you wrote an average size case, not even a big case, you're going to get 40% of 110. My small math brain says that's over 40,000. And there's renewals. The renewals are 4% from years 2 through 10 each year and 1% in year 11 and thereafter. So let's think about that for a second. Year 2 premium, as I mentioned before, is going up. Turnover may level that off a little bit, but there's generally it goes up a little bit. So 4% on 110,000 plus isn't shabby. And these cases always get larger. They're hiring new people. They're merging with another company. So you have a really nice commission flow after year one. Remember, new people coming onto the plan get that 40%. So, and additions, let's say you have a multiple salary case, the additional premium that's associated with additional insurance gets that 40%. So this becomes mushrooming clouds of commission. You're not touching an application. You're not doing an APS. There's no APSs. There's no aggravation with underwriting. There's no heartburn with underwriting. It's fast and quick, and you make money. We just wrote 4 cases on this platform, and the premium on 2 of them was over 300,000. So let's think about that for just a second. I'll move on to the next slide in a minute. 300,000. One of those is 330,000. 40%. Pretty nice payday for the agent. Not touching an application. The underwriting is going to take a day or two. And once we get all the applications, and we do all that application work online through our online enrollment tool, which I'll show you shortly. These are the last 2 slides. I know I'm still good with our time allotment. So I want to show, this is an actual case. This case happened actually with one of our other insurance carriers, but I'm noting it as an executive UL case because I don't want to mention the other carrier. That wouldn't be fair. So this is an actual case. The numbers are actual. And I'm just using the executive UL to make some points here of what could have happened had you been on this case. So 93 lives. The BGA called me up and said, I want to talk with one of our agents, with you, Rick. So we got on a conference call, three-way call. An agent talked to me about his prospective case. He actually didn't want the 1 million of level coverage that we did. He wanted something else that didn't work. It would never have passed the muster with protective. So we rolled up our sleeves on that three-way call and came up with 1 million each. Thanks to the BJ starting this conversation and this relationship. So 93 lives. Advisor made $55,000. Not bad. Again, no underwriting, no exam, no blood work, no open market aggravation. $55,000. Not a bad payday. It was very clear that the advisor, to me, again, this is Rick, had a big relation with the CEO, he was a buddy of his. I don't know if it was a college buddy or what, but I said to the advisor, can you get the CEO to write an email to these 93 people who are just insured through the executive UL program? He said, sure, Rick, he's one of my best buds. So an email went out to all 93 people insured, and the email said something like this. Dear Joe, highly compensated employee, as you know, we just completed an executive life insurance plan for you, paid 100% by ABC Inc. We did this because we value your employment with our firm and the great work you do. The coverage, you own the coverage and you named a personal beneficiary. We, ABC Inc., is paying 100% of the premium. Thank you for your loyalty. Next paragraph. Because $1 million of insurance is not insignificant, we're having our insurance agent, Joe Smith, contact you within the next 3 weeks. You may want some insurance planning. Maybe this insurance program or others that you have should be in an irrevocable life insurance trust or something similar. You will hear from Joe shortly. So the advisor Joe called all 93 people. I can't remember how many people he actually talked to, but that's not important. What's important, as you can see in the middle of the page, he made 24 sales. That's in addition to the executive UL sale where he made $55,000. 21 of those 24 sales were term insurance sales. Some were 10-year level, some were 20-year level. They were with 2 or 3 different insurance companies. 3 of those 24 sales were IUL sales. One of the IUL sales premium was north of $25,000. So, what happened here? Advisor on those 24 sales made $67,000. Again, I don't have a big math brain, but I know when it's 67 is added to 55, that equals something north of $120,000. So Joe made $120,000 plus on this. And why I'm showing you this is the BGA is the reason Joe made $120,000. Now, it's Joe's client, but it was the BGA who got us on a 3-way conversation. If it wasn't for the BGA, Joe doesn't make $120,000. He makes $0. So we made $55,000 on the executive UL sale, which caused the other 24 sales. Now, 2 things are very important about this scenario. One is that the advisor has 93 corporate clients, corporate insureds through his client. He has 24 personal clients that are part of the 93. Very difficult for his client firm to fire him. he's so ingrained in the executive highly compensated class, very hard. And the relationship with the BJ in this situation was just enhanced. Why? The BJ led the advisor, and they made $120,000 for the advisor. Diane Eskin, we had nothing to do with the 24 sales. That was with the advisor and his BGA, but we led them to the path. So everybody won here. The client won, the agent won, the BGA won, and all the relationships that have to do with this case were enhanced. Diane Eskin, we have a fully functional online enrollment system called eVictory Enroll. That's how we enroll all the cases online. We still can do paper. Not many firms want to do paper, but we can still do that. Each case is assigned an account manager here. Our account managers have 15, 20 years of experience in reference to implementing a case in the ongoing administration. And we deliver all the policies electronically. That could be to the firm, and they can distribute, or directly to the insureds. Any questions? I'll turn it over to Tim now. That took about 35 minutes. I don't think I went over my allotted time, Tim.
That was perfect, Rick, and we appreciate your time. And it's obvious as we listen to these presentations, just the length and expertise that Diane Eskin has in this marketplace. A question that I think would be helpful for everybody on the call, hopefully, is in terms of sales process. Let's say that as I'm listening to this presentation as an agent, I have triggered in my mind the exact type of firm or prospect that we're talking about with this product. In terms of sales process, at what point should I maybe ask that prospect or client for a census? As that is a critical piece of information, I think, to move forward.
That's correct. This is really thanks for bringing this up, Tim. This is really a census sale. If you can get your hands on a census, agents out there, advisors out there, you can get your hands on a census that could be a census of just the highly compensated people or the whole firm. If you get a census, we have a ball game. We have a ball game. And as I said before, and Tim, you may have heard this before, if you get a census, this program, Executive UL, is going to get you to the 1 yard line because the product is just so good. It's going to get you to 1 yard line. And I think salesmanship, which is a good word, salesmanship gets you in the end zone. So get a census, call Diane Eskin and talk to Rick, that's me or Jake, or call Tim and have us a three-way conversation like the example I gave you, and we'll figure out how to make this sale. That conversation with us or with Tim and us is very valuable because we can kind of help you mold that case to make the pathway easier to enlighten your client to move forward.
Yeah, thanks, Rick. And I would say, just to make it simple for everybody on the call, as you'll have my contact information, please feel free to just send that census to me because, worst case scenario, maybe that census doesn't match up exactly for this product that we're talking about. We'd certainly be able to point you in the right direction of maybe some other possible solutions there.
Right.
We do not have any other questions at this time, so I will wrap up and just kind of remind everybody that we did record this call. If you missed part of it or got distracted, we'll be sending that recording out in the next day or so. Again, drop me an email. Let me know what your plans are for 2021, how we can help you where you're at in your current business. Let me know your thoughts, and if you have prospects in mind for this particular product and you want to talk about having a conversation around that. Whatever we can do to help you, we want to hear from you. So thanks again, Rick and Jake, and Kurt Nolde was on the line. You just didn't hear from him from Protective. He's been instrumental in kind of helping financial brokerage team up with Diane Eskin on introducing this product to all you guys. So thanks, everybody, and I'll leave it there.
All right. See ya.